Welcome back. We continue to follow the collapse of FTX. An updated bankruptcy filing was filed overnight, giving us a bit more details, although there's still plenty to learn. Kate Rooney joins us now. She has the latest for us. Kate.
Hey, David. Good morning. That's right. Lawyers for FTX now say it has roughly 1 million creditors. When the crypto company filed its bare bones paperwork on Friday, FTX said it could have more than 100,000 creditors. There's some more detail there. We do expect to get a list of its 50 biggest creditors by Friday. FTX also saying over the past few days it's been in contact with dozens of regulators in the U.S. and abroad, including U.S. Attorney's Office, SEC, and the CFTC. And it says FTX faced what they called a severe liquidity crisis that necessitated the filing of these cases on an emergency basis. Last week, Alvarez and Marsal, also working on restructuring, and lawyers point out some of the complexity in this case with over 100 FTX entities involving what they call non-traditional assets or cryptocurrencies. It mentions FTX's governance as well. As a reminder, FTX did not have a board or a CFO. John Ray is the new restructuring officer. And for a reminder, this is the same John Ray who worked to restructure Enron. He's now working with an external legal team for FTX and cybersecurity, as well as forensic investigators to secure customer money. In addition, FTX hired independent directors at each of FTX's parent companies to ensure what they call proper governance and added new independent board members. Former FTX CEO Sam Bankman-Fried and the founder of the company with some cryptic tweets overnight. He said this morning he's going to talk about what happened. We have not gotten details yet, so keeping an eye on that. All of this is affecting crypto markets, guys. Alameda was one of the biggest market makers in the industry. That was the hedge fund that Sam Bankman-Fried founded. FTX, meanwhile, was the second largest exchange. So those clients added a lot of liquidity, too. Data firm Kaiko is calling this now the Alameda Gap. It says this past week has marked the largest drop in liquidity that they've seen across any other crypto market crash. Thinner markets tend to mean more volatility. You can see that affecting the depth, as we call it, of Bitcoin here in particular. Back to you.
Kate, why Sam Bankman-Fried continues to communicate, whether it's an interview with the New York Times or these tweets, I mean, it must be driving his lawyers at Paul Weiss insane. You spent time with him not that long ago. I mean, that New York Times piece, just sort of curious as to your reaction to it. He's playing a lot of video games. He seems to be doing some other things. I don't know. Give us, if you have anything to share in terms of just what this guy is thinking right now and why he continues to communicate, please let me know. Yeah,
I mean, the tone struck me, David, the idea that he wouldn't comment on some of the biggest elephant in the room, which is the allegations of misappropriating customer funds, some of the regulatory issues and potentially criminal liability he's going to be facing. The tone, meanwhile, the backdrop of that is, one of the quotes was, "It could be worse," he said. He's also talking about playing video games and finding a way to, seems like, disassociate with what's going on. So I think that struck a lot of people as odd. Those I'm talking to say, we didn't learn much from his comments. It was more of a roundup of what's happened. But surprising that he is speaking out based on some of the legal issues. And a lot of people on Twitter are wondering why he's putting out statements in multiple tweets that say what happened, but it's taking days. So there's some questions on the communication tactics here and who's advising him at this point. But that did stand out, David. And your guess is as good as mine as what he's thinking here.
Yeah, no, I'm sure.
Disassociated is a good word.
Yeah. Kate, thank you.
Thanks, guys.